Western central banks have weaponized financial assets in order to pressurize Russia. These actions appear well intentioned, but have they inadvertently crossed a line that might have some serious unintended consequences, not just for financial markets, but also for central bank currency reserves, threatening the US dollar's reserve currency status and undermining the global fiat currency system? My guest on GoldCore TV this week, Lynette Zang of ITM Trading, definitely thinks so. We discuss the beginning of the end of financial markets as we know it and why she's advising buying gold and silver to protect you from the financial megastorm that's coming. And remember, as always, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Lynette Zang, welcome to GoldCore TV.
I'm so happy to be here, Dave. Thank you for having me.
It's great to have you. Now, what I'd like to start is by asking you, over the last couple of weeks, we have seen governments weaponizing financial assets for, on the face of it, good intentions with respect to putting pressure on Russia and in particularly on Putin. But there's potential for this to have some serious unintended consequences. Is that something that you'd agree with? And what type of consequences do you think that this might bring on?
Well, I absolutely do agree with that. And it's not really a surprise because what we've really been witnessing in this war is an evolution of how wars are fought. And the unintended consequences, it's almost like you can only play this hand once because then everybody else knows that if you do something that the US government really doesn't like or the NATO allies really don't like, then they will just cut you off from the global financial system. So I think it's a slippery slope, and I think it's dangerous, and I don't think we're even near seeing the end of these financial weapons of mass destruction.
We've seen, obviously, from a Russian point of view, their dollar assets being effectively decimated. In terms of if you're China sitting looking at the Western world having behaved in this way, and you're sitting on as many dollar assets as they are, you got to start to think that they're looking and they're getting a little bit worried.
Well, I would absolutely say so, but I don't think that this is a really big surprise. I mean, Russia and China have created a really strong bond. I think what's happening is just making that bond stronger. But, you know, it was a number of years ago where they already started to create a financial system outside of the US's. And now Saudi Arabia is thinking about pricing oil to China in terms of Yuan, which is really a big key of what enabled the U.S. to retain the title of the world reserve currency. Okay. So, you know, I think what we're really witnessing, and I think moving forward, what we will most likely see is for the U.S., that loss of position of the world reserve currency.
What you've got is you've got a massive oil exporter in Russia, and you've got a massive oil exporter or a massive oil importer in China, and then you've got somebody sitting in between them, bringing them together, saying we could protect, you know, we're going to price oil in Yuan and match out this trade and keep the Western world and keep the US out of it.
Exactly. You know, I think that's exactly what we're witnessing. I mean, to me, it's really fascinating because I also think a lot of what's happening is misdirection. I mean, I've studied currencies and currency life cycles since 1987, and there are always these repeatable patterns. So much of what I do, or, you know, in my work, is to try and help people see what those patterns are. And quite frankly, war is one of those patterns that always happens during currency transitions. And I mean, let's face it, the monetary system, the fiat, government-based, based on inflation, there's virtually no purchasing power left. in the currencies, and this is true in the US dollar. Officially, there's 3 cents left. But, this is also true everywhere in the world because the US and the fiat money system has really driven the world to zero value. And now we're seeing inflation heat up, and that tests the only other tool they have, and the key tool that they have, central bankers meaning, and that's interest rates. Because the world is essentially anchored near zero and has been since 2008. And typically when you go into, a recession, this is going to be way bigger than a recession. But when you go into a recession, what do central bankers do? They drop interest rates in this country on average about 5.5 to 5.75%. That stimulates borrowing and spending. And so it makes it look like we're coming out of a recession. But when you're anchored at zero, the big experiment with negative rates, as that didn't really stimulate economic growth. So what are they going to do? Because on the same side of that, the PPI, Producer Price Index, came out at 10%. And, you can trust all those numbers. It's probably worse than what they let us know. We know that. They change formulas. And so you've got inflation running hot, which in theory, they have to raise rates. But all this talk about running off the balance sheet, raising the rates, frankly, it's all garbage. Because what are they going to do? Go up 0.25% or big shock and awe, 0.5%? That isn't even marginally. It's still very loose policy. So you're still in ultimately negative rates if you're an income buyer, because those rates still aren't keeping pace with inflation. So frankly, it's a joke. And to me, there is not one doubt in my mind that this
you've got official CPI running close to 8%, and we've probably got the 10-year close to 2% at the moment. So you're looking at -6% negative real interest rates, right? And that's off the official rate. And if you have a look at something like shadow stats or something, it's significantly more than that, 12 to 14%. So yeah, if you've got negative real interest rates of north of 10%, what's a 0.25% rate hike going to do?
Even 7 of them.
Yeah, exactly.
They're pricing at 7. I mean, it's ridiculous, really.
And they've only literally this month now stopped the quantitative easing.
Well, maybe.
Yeah, I mean.
Okay, maybe.
Yeah.
There are lots of workarounds.
Well, this is true. This is true. Officially, they have. So where do we go from here?
Well, personally, I go to gold, physical, and silver. Because that is proven over many, many years. Here's silver, here's gold. I go to real money because this is the death of a currency. That's really, take all the other garbage out, and really what's happening is the death of the current fiat money system. And it's happened so many times, over 4,800 times. This time is no different. Yes. So you need real money to protect you.
And so you see this as the death of a fiat currency system globally, or do you see the demise of the dollar in particular, or the demise of the dollar as a reserve currency, or are we talking about a total change?
All of the above, right?
Okay.
So yeah, absolutely. There is absolutely no doubt, because look at the level. What really is inflation, right? Inflation is the consistent loss of purchasing power. And when you look at the graphs on, the official graphs on purchasing power loss, this is the piece that everybody misses, right? Stock markets going up, crypto markets going up, real estate markets going up, but that's in terms of a dying dollar. So if you have an asset, a financial asset, that you can only convert into that government money, whether you're in Ireland or whether you're in the US or whether you're in China or anywhere in the world, if you can only convert that into the government money, and the government money loses all of its value, and it will do that based on confidence. That's why they test that consumer confidence and inflation expectations and all of that, because this is a con game, as you well know. And so when you look at what's happening, this is definitely the loss of world reserve currency status of the U.S., but that's a long time coming. And I personally think that the role is going to the IMF's, the International Monetary Fund's SDR, special drawing rights, but that's made up of all of these garbage currencies, so it'll be interesting to see what that transition actually looks like. So yes, I think the U.S. has absolutely been, I mean, that's why the euro was created, the loss of the world reserve currency, but this is 100% a global issue because the world has been tied to either the euro or the U.S. dollar since the early 2000s. And how's the euro doing?
Let's not go there. And maybe you just tell me why it is then specifically that you turn to gold and silver in these times.
Well, how about if I tell you, because this is one time I do agree with the Bank for International Settlements, the BIS, the central banker's central bank, and I turn to gold and silver for a number of reasons. Number one, because according to the BIS, and this is a fact, it is the only financial asset that runs no counterparty risk. Absolutely everything else is all counterparty risk, including the U.S. Treasury as the foundation of the global financial system. You know, number two, it has the broadest base of buyer. And I basically hardly ever hear anybody talking about that fact. But, you know, whether it's yen or euro or dollar, it has value. It has a narrow base of buyer because it's only in one sector, the financial sector. But when you're looking at gold or silver, it's used in manufacturing, it's used in the financial system, it's used in the jewelry system, it's used in the medical system. I mean, it's on and on and on and on and on. So the reality is that the physical metal itself has the broadest base of buyer because it's the only financial asset, the only asset really, that's used across every single segment of the global economy. And it's not sovereign money, meaning a government in order, you know, here, this is the Reserve Bank of Zimbabwe, a $10 trillion note.
Oh dear.
Right? The government says this is money. The government goes, oops, no longer money. But they can't do that with gold because it's not based on a sovereign nation. It's universal money. And it is small, easily portable wealth. Right?
Yes, indeed.
And it's invisible. I mean, it's truly decentralized and it's truly invisible. That's why governments around the world have spent so much time trying to teach people away from gold and silver and into their fiat money products because it's so much easier to steal.
Now, we've seen gold reach its all-time high again recently, but we've seen it sell off since then. Given everything that's going on in the world and the destruction that we've seen in terms of what inflation has done and the potential for inflation to obviously not be transitory, but be sustained and potentially go even higher, why do you believe that we're not seeing gold and silver a lot higher?
That's such an easy question. And that is simply because a rising gold price is an indication of a failing currency. Do they want you to know that the currency is failing? No. So they've had to suppress the price for, I mean, really, a very long time in order to be able to manipulate how you move forward. It's called officially perception management. And then on top of that, there's a finite amount of this. That's it. There's only so much, whether it's above the ground, in any form, doesn't matter. There's a finite amount. But what can they do? They have these financialized contracts, spot market and futures contracts where there's an unlimited amount of gold. And in fact, before I knew how to capture print screen, unfortunately, I'm sorry. And before they changed the way they accounted for it, according to the Bank for International Settlements, for every 1 ounce of this, 1 ounce of gold, there were 62,000 derivative contracts. That is gold that does not nor ever exist, and that's just in one area. So do you think if the world believes or feels like there's 62,000 more of these than there really are, could that suppress the price?
And do you believe then that obviously as a gold buyer, then you believe that that cannot be sustained, and at some stage and potentially sooner than originally expected, given everything that's going on in the world at the moment, that that's going to start to unravel?
Oh, 100%. And it isn't just that that's going to start to unravel. It's going to be, because I guarantee you, I'm not going to be looking to Wall Street to tell me what the true value of an ounce of gold is. But when confidence is lost in the current system, and we are rapidly approaching that, as you indicated, then people lose confidence. That's when we'll enter the real hyperinflationary stage. And then in order to get the public to use the currency, what they'll do is, I mean, globally on average, they do this 3 times. So it could be more, it could be less. But they'll lop off zeros. They'll just change the accounting. And what you'll see is when they do the revaluation, they do it against gold, period.
Right.
Gold is the only thing that has evolved over thousands of years to be a good money. It's the only instrument, the only commodity, the only anything that actually has all of the components required to be a good money. So they revalue it against that, and then ultimately what happens is gold goes near its fundamental value, which I just did the calculations on this last week, so these are new enough. And that was, right now we're at what, 1964 or something like that. True fundamental value of an ounce of gold just in the US, so it's actually higher, and this is conservative, is over $13,000. And the more debt they grow, the higher that number goes. So it's the only bargain. Tell me what else is a bargain out there.
And obviously, silver. How do you differentiate between the two of them? Are you as bullish on silver then as you are on gold, or do you see it as a slightly different type of investment?
Well, I'm very bullish on silver as well, but I look at functionality. What am I trying to accomplish? And then what's going to give me that? So I am definitely equally bullish on silver, but silver is the secondary monetary metal, whereas gold is the primary monetary metal. So this is what the reset is done against. So for me personally, I use silver for my barterable, day-to-day kind of barterable portfolio. Okay. Gold for me is more about wealth preservation and growth. Because right now, just as an example, right now you've got real estate, income producing real estate prices up here, and you've got gold prices down here. That will flip flop. Right. And then I can take some of the gains from here and convert them into the income producing assets. Okay. So that's part of my strategy.
This over the last week, we've seen in the London Metals Exchange a lot of, you can call them shenanigans, right?
Yeah, good word.
A lot of shenanigans going on, and we have seen a situation develop in an exchange that probably most people wouldn't have expected. We've seen, obviously, there was a short squeeze that went on there, and over a couple of days, the price of nickel went up by about 250%. The exchange was shut. new controls were brought in, trades to the value of $4 billion were effectively cancelled. I may or may not have that number right, but it's as near as makes no difference. But trades were cancelled. Margin calls were effectively allowed to be not honored. On one side, you had a Chinese company who was short. On the other side, you had some US banks. And what we saw there is kind of a fundamental destruction of an exchange and everything that exchange should stand for. Is this a kind of a whiff of things to come? Is this a sign of the crumbling starting to happen?
Oh, I would say absolutely. And it's also perhaps the crumbling of the. Okay, I'm going to say this one tongue in cheek and then I'll explain why.
Okay.
Okay. But, I think we're also seeing the crumbling of the facade of these exchanges making things fair and right. And I think what we've seen, though we have seen this before in halting trades and backing things out, et cetera. I mean, I think that the London Metals Exchange has really destroyed its credibility. That's, and to the markets, to the broader markets. And I think that is really dangerous for them, but all the more reason why you need, wealth in your hands. Because if you don't hold it, you don't own it.
Yes. And dangerous not to them, not to just them, but dangerous to all exchanges. So
Exactly.
obviously there's been questions raised and asked, particularly in precious metal spheres, about the COMEX over the years. And a lot of things that would have been termed as kind of fringe conspiratorial are going to look an awful lot less so when viewed through the eyes of what's gone on in the London Metals Exchange recently.
Exactly. Well, even talking about Basel III, as gold shifted into a tier one asset, but the bullion banks were given all sorts of exemptions, so nothing happened. Or, so for me, they do not have any credibility. I'm ever so grateful that in my past I've been a banker and a stockbroker, so that I worked inside the belly of the beast at a level to understand what's really true and happening. And this is something that I can't give you a lot of guarantees, but this guarantee I know I can give you because it's just the historic norm. And that is, at some point, every single asset goes to its true fundamental value. And that fundamental value is not defined by Wall Street. I've noticed that they talk about fundamentals all the time, right? And fundamental value, which is garbage. What you have to do is you have to look back longer at history. And you look at what is the single most important function of any asset or instrument for the creators of that asset or that instrument. Not what you want it to do, but what was it created to do? Gold was created to hold its value over time. That's what it was created to do. And so what I know 100%, fiat money's fundamental value was created, designed to lose value over time, so that you were volunteering your labor, your efforts, your wealth, your work. So gold's fundamental value, by the time it goes there, maybe it's going to be 100 trillion, because we just get blinded by those numbers, but those numbers mean anything, because here's 10 trillion. It can't buy me an egg. Can't buy me an egg, right? So all of these fiat money products and this financial innovation, well, I'm sorry, but that's all built on a house of cards and lots of debt and lots of leverage. And the reality is we are watching that unravel in real time. It is a con game. So this testing of the confidence, between the war that's going on and with the metals exchanges and all of this, people are starting to wake up. We're starting to see consumer confidence and confidence in the system. They not starting, but they are near historic lows, which means it won't take a very big push. I don't know, maybe 15% inflation before people lose all confidence and we go into the next phase of this. And you better have, well, you better have physical gold and silver in your possession in order to do that. But you also need food, water, energy, security, barterability, as well as your wealth preservation, your community, which is really why I'm here today, because this for me is about community, and shelter. These are the things that we need no matter what is happening in the economy in order to be, survive. And, I mean, did you think in your lifetime you would see all these grocery store shelves bare?
It's unbelievable, isn't it? Yeah. And we're looking at the reality as we're seeing a spike in commodity prices, and most people aren't necessarily either aware of that now or even aware of the implications of this. Russia and Ukraine between them are the largest exporters of grains, of wheat in particular. That's taken a massive amount of supply out of the market, which has obviously squeezed the market higher. And the last time that we saw wheat prices at this high, it was one of the causes of the Arab Spring revolt. So that's the type of thing that starts to happen when food prices start to go up. And then in addition to that, the natural gas, which is actually ultimately used in the production of fertilizers. And now we're going to have, we've seen the price of fertilizers go up. So even if you grow grain in your own country, you need fertilizers in order to maintain a decent yield. If you can't get that fertilizer, your yield goes down. If the yield goes down on your fields, the prices go higher. And we've got scarcity. It's not just about high prices, it's about food scarcity as well. So we're probably looking at a period of food poverty going forward as well.
Oh my gosh. I mean yes. And we got a whiff of it. I remember in March 2020, and because of my studies, I was I was at ITM, and 2008 surprised me, right? I mean, I was watching with everybody else, and my alma mater was Shearson, so I was paying a lot of attention to it. But I 100% knew when the system imploded in 2008 that the system died. So I was living in a little condo, 2-bedroom condo, getting ready to retire, could lock the door, could travel, could do whatever I wanted. And then 2008 happened. So instead what I did was I bought a half an acre house. I bought a house on half an acre, right? And I started my gardens because I knew that food became the single biggest issue for people during the transitions that we're in right now. And so I started growing my own food. And I was not a gardener. I had no idea what to do. I can't even tell you that I know a lot more now than I did 10 years ago, 11 years ago. But, still, I wanted to make sure that I could feed my family. And ultimately, I've converted the entire property into an urban farm, and I could probably feed about 100 people. But when you're talking about fertilizers, okay, I converted my pool into an aquaponic swimming pond. I put in a tilapia pond. I have chickens, so I have eggs and I have chicken because I do meat chickens as well as nuts, fruits, vegetables. And when March of 2020 hit, I'm walking around my gardens and I'm going, okay, good. So I couldn't have my avocados, but booty hooty Rudy Manooty, right? No big deal. And, but I knew that was a taste. I knew that wasn't the worst of it. And I encouraged people at that point to see where their holes in their strategy was. Do you have the money to transact? Do you have the food, water, etc.? And I discovered that my personal hole, because I had all that stuff covered, but what I didn't have covered was the fact that there were riots just a few blocks away from me, and I live in a nice neighborhood, and a few blocks away from my daughters, and they live in a nice neighborhood. And I thought, and I slept one night with a gun in my bed, and I thought, oh my God, there's the hole. So, fortunately, it took me a while, but I was lucky enough to find a bug out location that was big enough to accommodate everything. And now I'm working, on developing that. It had most of what I needed. But, I think people really need to take stock in everything. What gold will do for you is it will ensure your purchasing power when everybody loses theirs and you're in a position to have the wealth shift your way. What silver will do, in all different sizes on both, but what silver will do is ensure that if you need to put a tank of gas in your car or buy a pint of strawberries, it's just universally barterable. My eggs are barterable too, but maybe you don't need eggs. And we saw what happened with toilet paper, right? I mean, and I had said for years, because that always happens in a crisis. I don't know why, you got leaves, but but toilet paper is a great tool of barter, but you have to have all of your bases covered. So, I'm very grateful that I've had really had the experience to see what was coming and the foresight to actually act on it, because I feel like I'm in a great position right now. No matter what happens, I'm in a great position.
So before we wrap up, Lynette, maybe you could just tell us where it is that you hang out online. You have a YouTube channel, is that correct?
I certainly do have a YouTube channel where my goal there is to translate financial noise into understandable language so that people can make educated choices rather than FOMO, right?
Indeed.
And so you can either put in the search ITM trading, or you can just put my name in, Lynette Zang, and I'm pretty sure that it will come up. And of course, we have a website, and itmtrading.com. And what we really like to do, and look, this is part of the community. So even though it may seem like we're competitors, I don't think of it like that. I think of us as warriors together in this, because we've got to get people's eyes open.
Indeed.
Right? We need about 3% of the population to understand what's happening so that we have choices with the next iteration of the, programmable money, scares the crap out of me, that they have in mind for us. So I just put together a strategy for myself based upon all of those repeatable patterns. And that's what we like to do at ITM, is help people develop that strategy for themselves.
Translating financial noise into understandable language. Well, I think that's been very well demonstrated by you today. I'd love to have you back on the show again, Lynette. But for now, Lynette Zang, thanks for joining us on GoldCore TV today.
My pleasure.
Thanks for watching. And if you enjoyed this video, check out these recent interviews, one with Rick Rule, ex-CEO of Sprott US Holdings, and this interview with Michael Pento of Pento Portfolio Strategies. You'll definitely enjoy those, so go there and watch them next. And remember, as always, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to GoldCore.com, your precious metals experts.